Hello, students. We have a guest speaker with us today. Mr. Scott Jenkins will be presenting on some accounting and tax considerations when dealing with foreign business operations. I will allow Mr. Jenkins to introduce himself, but he is a very intelligent guy who I thought would be a great asset to our discussion. For a lot of us, this tax and accounting world is a lot to digest. Me being a management and marketing focused business professional, accounting is not my area of expertise either. So I understand if it seems like a lot of information, but I promise it's a lot of great information and a lot of very helpful information. For those of you who are considering a career in accounting or in tax, this is a great way to expose you to some of the areas of tax and some of the areas that you could possibly have career interest in. So give your attention to Mr. Scott Jenkins. Mr. Jenkins is also my older brother, so I know how much he knows about a lot of things, and I thought he'd be a great person to share some of his knowledge with us today. I hope you enjoy this guest speaker.
Good afternoon. My name is Scott Jenkins, and in case you haven't been informed yet, the young lady speaking to you as your instructor is my sister. I'm a CPA, and although I do not have a specialization in international taxation or business, I do have a lot of international involvement because of clients that I've had throughout the years. Just to tell you a little bit about myself, I primarily am experienced in small domestic companies, your mom and pop businesses, but over the years I've gained some experience in consulting with very large international companies that produce pretty much everything in our daily lives. Although my primary experience is domestic, I continuously represent and audit large companies with significant international activities. So I guess I'll start off by telling you a little bit about myself and my background. So like you, I was a student at Nichols. Hard to believe, but it's now been probably 25 or more years since I've been sitting in your seat. So in today's world, you'll hear a lot about pick a specialization as how you make a lot of money. While I will agree it is a way to maximize income potential, it's my experience that being a generalist, more of a Renaissance man, being familiar with a variety of topics has served me quite well, and I wouldn't have it any other way. I lack the focus to stick to one area and specialization for an entire career. As Stacy will tell you, my interests are too varied. I have literally focused on everything from physics to business to history to building construction, you name it, my hands are in it. Like many fresh out of college, I began my career in a small regional CPA firm auditing financial statements for oil and gas companies. That's quite common here in the Louisiana area. From there, I took a variety of career paths. I've done everything from internal audit to being a controller, to having my own tax practice, to working for a regional boutique tax field, tax practice, serving the Gulf South region. I get bored quickly, so the controller environment was not for me because it's a repetitive cycle of doing the same thing over and over on an annual process, and after about 3 years of that, grew tired of it. But with experience in audit, tax, controllership, internal audit, I was primed to take on consulting roles for entities. And unfortunately, I did spend a period of time, I spent about 5 years. I went over to the dark side during my time in private practice, I had a lot of really bad experiences with the IRS. And so I decided, I had an offer on my tax practice. I sold my tax practice, and I went to the IRS to be a large business and international auditor, basically. So what I got to do during that time is gain some experience in business entities of sizes I had never before seen. I'm talking hundreds of billions, companies that literally have 200 consolidated entities in their tax return, with an additional 200 to 300 pass-through entities. And of course, the span of a business like that reaches across the globe. So I've audited, I can't disclose the names of some of these businesses, but everything in your daily life, from the computers you're using to the paper products you're writing on, I've audited the companies that have dealt with those. And during that time at the IRS, it was never my intention to make a career there. I wanted to learn everything I could about them, so that I could effectively represent others before the IRS to prevent them from having the same bad experiences that I had had in my private practice. So that's my brief history and how I gained international experience. I presently represent some very large companies who are subject to continuous audit by the IRS. I represent them before the IRS. And as I mentioned, I am not an international tax expert nor business expert, but I'm familiar enough with the issues to know when there is something that I need to reach out to a specialist who is that international tax or international business specialization. And I feel that that's probably the most important thing, being familiar with the topics, knowing that an issue potentially exists, and knowing and having a group of people who can advise you on the topics. So in today's globalized economy, it's rare to find large companies that don't have international implications. While you don't need to be an expert in every international issue, it's crucial to be aware of the potential implications and to know when to rely on experts. So let me walk you through some key considerations that I have in my international dealings. Does a company have regular or substantial presence in the United States? One of the first things to consider is whether a company has a regular or substantial presence in a foreign country. This can affect various aspects of its operations, including tax obligations and compliance requirements. Foreign companies in America. Foreign companies with sales or operations in the U.S. face unique challenges. They need to navigate the complex landscape of U.S. tax laws and ensure they are compliant with both domestic and international regulations. Sales to foreign customers. When it comes to sales, there are significant differences between selling to foreign customers in the U.S. and making overseas sales. The implications for customers can vary based on where the sales are made and how they are taxed. Another consideration is indirect taxes. So indirect taxes such as the value-added tax, which many of you are probably hearing about on the news presently. Value-added tax is tantamount to a tariff, basically, on foreign goods. So it can play a crucial role. These indirect taxes are imposed on the consumption of goods and services and can differ significantly from one country to another. I'd say today, two of the biggest tax implications in the international world are the global minimum tax, known as the GILTI tax, or the FDII deduction, FDII deduction. So understanding the global intangible low tax income, you've probably heard that much of the world operates under a global minimum tax structure, meaning that if you do business in a country with a very low tax rate, and you are a U.S. business, you are going to pay a minimum tax. So if you pay 7% in the country you're doing business in, you are going to have a minimum tax of 15% here in the U.S. and we'll catch up the difference and tax you for what was not collected by the other country. But on the other hand, you also have the FDII deduction, and that is the foreign derived intangible income. And it does allow a very nice deduction to allow taxation at a lower rate on export activities and foreign derived income. Another consideration in international business and taxation are tax treaties. So tax treaties are agreements between countries that establish tax rates and rules to prevent double taxation. They're basically companies operating internationally to understand and leverage these treaties effectively. So one of the big ones is currency translation. It's probably one of the largest considerations that have to be dealt with from accounting and tax perspectives on international business. So currency translation is basically sales made in other countries need to be valued in US dollars on our financial statements here in the US. So this process can lead to gains or losses depending on the exchange rate fluctuations. So if your transactions are settled in the Japanese yen, and that currency is strengthening or weakening against the US dollar, when you convert those yen to US dollars, you're gonna basically have either more or less US dollars than what the sales of that product resulted in, and that is in effect a gain or a loss on currency. So with currency in mind, something else that many of you may have heard of is currency trades. So I'll give you an example of a world famous one. It's called the yen carry trade. So this involves borrowing in a low interest currency, the Japanese yen, and investing that borrowing in a high yielding instrument overseas, a lot of times the US stock market. So this can lead to some problems, however, when central banks intervene and protect their currency, like the Japanese central bank. It can cause significant market disruption because if the value that I am getting from, so if I'm borrowing a low cost yen and investing in a higher interest rate yielding product, well, when my currency strengthens too much, I run the risk of losses on my investment. So that often leads to massive selling events. We saw one here a few months ago in the United States, which led to a flash crash in financial markets and the stock markets. So the implications run far beyond the business operating internationally. It can literally affect the entire world. Another consideration for accountants is the method of presentation of our financial statements. So here in the US, we use GAAP to state our financial positions, but in much of the world, we utilize IFRS, which came about, 10 or so years ago. And so you definitely have conversions between one financial statement method and another. So if I'm a U.S. parent on the GAAP basis of financial statement and I have a subsidiary that has to prepare financial statements for, say, a foreign government, I may have to utilize the IFRS method of financial statement analysis, and if that entity is consolidated on my tax return here in the U.S., I'll have to convert from their IFRS financial statements to the U.S. GAAP financial statements. And finally, final consideration that I can think of that I deal with regularly is consolidation of foreign subsidiaries and repatriation of profits. So consolidation of foreign subsidiaries and the repatriation of foreign profits to the parent company is a very complex process that requires careful planning and execution. It's not so easy to get what you earn in a foreign country back to the benefit of the U.S. parent company all the time. So it's a consideration that has to be planned for well in advance, and a lot of times things don't go according to plan. So in conclusion, while you may not need to be an expert in every international issue, being aware of these considerations is definitely crucial for operating successfully in large business. Relying on experts when necessary and staying informed about global developments will help you navigate complexities of international business. So to end things, I'd just like to tell you about some experience that I had that maybe made me successful in falling into the lap of these large businesses with international trade. I'd say primarily, number one thing that prepared me for it is reading. So I read heavily, probably 30 to 50 books per year. I read in varied topics. As I mentioned at the beginning of this video, history is quite important in understanding your current environment. So much of what I hear in financial media is incorrect. So you'll hear things happening today which have repeated so many times in the past, and if you're unaware of that history, you won't be aware of it. But most importantly, the topic that I read on that prepared me for these large international institutions is monetary policy. I will venture to say that the majority of you truly do not understand what money is, how it operates, how it's manipulated. So if you really want to do yourself a favor, start reading now on everything from the Federal Reserve to gold standard to sound money. Understand the difference between Austrian economics and Keynesian economics. A lot of these macro factors will make you have an understanding of how fragile the system truly is. If most of Americans and most of the world understood both the volatility as well as the fragile nature of the financial system that we sit upon, most of you would live in constant fear. It's truly, once you gain an understanding, and I mean, no one's ever completely done with understanding. It's so complex. Even with the introduction of AI, you know, I truly question whether we'll ever be able to draw more than correlations. To find causation is not always the easiest thing to do, but those two topics, both the study of financial history and monetary policy, have probably made me more adept at speaking to executives and CEOs who have dedicated their careers to building and growing incredibly successful, hundreds of billions a year in revenue businesses, and makes me feel not quite so much of an idiot in their presence. So if I were to give you one piece of advice, it would be to start learning that now, because you're not going to learn it in a day. This is something that's going to take you years to understand. So with that being said, it's a pleasure speaking to you, and I hope you enjoy the rest of your semester. Thank you.